Today, we also have 5 states and Washington, D.C. holding primaries. And though the presidential nominations are all but guaranteed, one key issue on voters' minds is what happens to those tax cuts set to expire next year. It's a $4 trillion question with huge implications for the economy. Megan Casella joins us now with more. Megan?
Kelly, former President Donald Trump and some Republican lawmakers are signaling they want to see a full extension of those 2017 tax cuts. But it will come at a price. So new research from the Joint Committee on Taxation says a full extension would cost $4 trillion over the next 10 years. And the Committee for a Responsible Federal Budget says those cost estimates are now 50% higher than initial estimates from 2018. Costs are rising for a couple of reasons. Part of it is simply inflation and rising wages, so the base of income to tax is larger than it was. Economists have also been able to see the tax law in action for several years now, so they have better data on which they're basing those estimates. But the bigger question is what all of this means for the size of the U.S. debt. So without corresponding pay-fors, this would add $4 trillion to the 20 or so trillion the U.S. is already projected to borrow over the next 10 years. And the economists I spoke with say this matters for debt sustainability. So if you take a look at our debt to GDP ratio, it has been holding fairly steady. And economists say debt growth is manageable as long as it increases more slowly than the broader economy. But extending the tax cuts could be the tipping point that changes that. Economists with Brookings estimate that without major cuts in spending, debt would soar to 211% of GDP within 30 years. That's up from the 120% level where it is now. So, Kelly, this is highlighting one key economic issue at stake in November's election. Trump so far is talking about full extension, while Biden is pushing to raise taxes on corporations and the wealthy. Kelly?
That's super interesting, Megan, because it obviously seems unsustainable if those tax cuts are extended. But it's hard to imagine that President Trump could really campaign on anything but keeping them in place. And yet, practically speaking, you have to wonder if under either administration, taxes will end up going up.
You do have to wonder that. You could chalk some of this up to campaign rhetoric. I think that's possible here. A lot of the folks I spoke with, both economists and political analysts, think that even Republicans in the next administration, if they had control of Congress, would find a way to pay for some of this, that there's likely an in-between for the corporate tax rate, right, between the 21% level where it is now and the 35% level where it was. Maybe they could land somewhere in between, but it is clear it's a good campaign talking point, right, to say that you're going to fully extend tax cuts. That's one way to get businesses on your side.
All right, Megan, thank you very much. Megan Casella reporting from Washington.